Hi, I'm Jade Athas, a realtor with Berkshire Hathaway, and I wanted to share with anybody thinking about buying in 2021 a tip when they're asking, when they're reaching out to their lenders and they're talking about a pre-qualification versus a pre-approval. So that way you understand the difference and you know to ask the question. When I'm working with a buyer and we are looking to make the offer on the house that they've decided is their perfect fit, I want to make sure that I have a pre-approval because that's considered with more heavier weight. It's more serious. It's a conditional commitment to loan you the funds for your mortgage. So what that means is that a seller knows that you are a serious buyer and you've gone through all the right procedures. So I'm going to jump back and explain a pre-qualification. A pre-qualification is the first phase. When you pick up the phone and start talking to the lender, you're sharing with them what your salary is, you're sharing with them if you have a car payment or a credit card payment, you're talking to them about what percentage you want to put down on a loan, and that's kind of considering, and they're talking about like what assets are you looking to put into the purchase of your home. So they have not pulled your credit, they're just at that point assessing your goals. They're trying to understand, are you looking for a one family? Are you looking for a two family with the potential to rent one out and try to offset some of your mortgage payment with a rental income? They're working with you to assess your goals and making sure they're giving you the right product, because there's first-time buyer FHA loans. In Connecticut, there's CHFA, which is the Connecticut FHA program. There's conventional, and a lot of the area in Connecticut could qualify for a USDA loan, which is associated with agriculture and the different land. So again, that pre-qualification is that initial phone call where they're talking to you and just giving you like a ballpark idea of what type of a loan that you would qualify for. The pre-approval is when you have provided the lender with a W-2, with bank statements, so that way they are verifying what is your income, what are your assets, and what is your debt. That way that letter that they give you, that conditional commitment, then at that point they have provided they've pulled the credit and they've looked at your credit. So they are again assessing your income, your assets, and your debt. They're looking at your credit, and you've actually filled out a mortgage application. So after that's done is typically when you would get a pre-approval letter, and that's when the lender is saying, okay, go shopping. A tip that I will give you and throw in there is that you don't have to shop at the top of your budget. You can work with your lender and say, okay, my rental, I'm renting right now and my payment is $1,500 a month, and you can work backwards with them and say, okay, $1,500 a month, we will take out the average taxes in the area, we will take out what does it typically cost for homeowners insurance, and then they're left with what's going to be your principal and interest. And that will allow you to have the opportunity to say to them, this is really what I'm comfortable with. Because again, we are all on the same team and we are working toward getting you into your home and making sure that the payment and everything works for you. So the key takeaways here are that a pre-qualification is simply based on data that you have submitted as the borrower to your lender. This is where they provide you with a ballpark or an estimate of how much you can borrow. The pre-qualification amount isn't a sure thing because it isn't based on, it's only based on information that you have provided. I stumbled there, so let me say that again. The pre-qualification amount isn't a sure thing because it's based on information that you've provided them. The lender won't take a closer look at your financial situation and history to determine how much mortgage you can reasonably afford until you actually reach that pre-approval stage. And that's why it's so important to make sure that you've done that already when you're shopping. At that point, you as the borrower receive a conditional commitment in writing, that's your pre-approval letter, for an exact amount of a loan that they're pre-approving you for. Now again, I want to remind you that it's a conditional commitment because if you go buy a car or you get really excited about a house and you go and you buy all sorts of new furniture, that can affect how much money that they can lend you. So we'd like to remind you when we get to that point, don't go buying anything crazy. Wait until after closing. So please follow my Facebook page. If you have questions, you're always welcome to reach out to me or write me a comment and share with me what information you would like to hear in my next video. So thank you so much for taking the time to watch my video. Please like and follow my Facebook page. And if I can ever be a resource, please reach out. Thank you so much. Bye.